Good morning. You are still watching Metropole Television. This is Business AM. Straight on to our economic review, where we'll be telling you the biggest headlines that you are waking up to this morning. Let me take time to introduce the gentlemen who are going to help us understand these economic headlines as we wait for the close of the business week today at 3 p.m. We don't have Edward Kusewa, who's joining us from home, and we don't have Mr. Nderi Johnson. We're waiting for Dr. Samuel Nyandemo to join us shortly, as we also wait for Mos Ndiema, who I want to apologize has got into some sort of inconvenience, and we promise we shall be getting him back the soonest that we can for this conversation. So let's get started therefore. Now, the Kenya National Bureau of Statistics data now shows that the number of persons aged between 15 and 34 who are not learning or working has increased from 2.75 million in December and 2 million in June last year. Now, since the pandemic struck, nearly 3.17 million young Kenyans eligible for work or school are idle in the 3 months to June, underlining the time bomb of youth unemployment in an economy shedding jobs, seeing firms downsize and send employees on voluntary leave. Thus, the unemployment rate in the second quarter of 2020 has doubled from 4.7% recorded in the second quarter of 2019. Therefore, the youth continue to suffer from unemployment and underemployment. Now, the survey analyzed the labor market situation for the population aged 15 to 64 years for the period from April to June 2020. Now, the highest proportion of the unemployment was recorded age groups 20 to 24 and 25 to 29, registering 22.8% and 21.7% unemployment rate respectively. Furthermore, the two age cohorts had the highest increase each in unemployment over the 3 months at 10.1% and 14.3% respectively. In addition, the quarter saw a rise in unemployed persons to 4.6 million from 2.9 million in quarter one. Now, this saw the combined rate of unemployment and potential labor force rise to 22.6% from 14.3% in the first quarter of the year. Question is, job losses on the rise. That is what we are saying. I'm going to start with you, Mr. Nderi. Good morning, by the way.
Good morning.
Thank you very much for joining us.
A pleasure.
Can we just attribute this to COVID-19, or this is what we have been going through in the economy?
There's an aspect of it that is inertia from historical performance, and part of it obviously is because of COVID, naturally, and we can see the numbers from the banking sector and from everywhere else, schools and hotels. So I mean, when international travel was stopped, international trade obviously was interfered with. So you've got all that was stopped. So that's primarily COVID, but there's also inertia from historical performance.
Pretty much. Now, Mr. Kusewa, I want to come to you on the same question as well. Yes, unemployment is on the rise, fine, and we've seen exactly how quarter one has really behaved in terms of those numbers. Would you just attribute this to COVID-19 or just something that we have been struggling with as an economy?
I mean, that is in order. I mean, anything that scares the market is bad for the economy. We have seen we are a market economy, and as such, you know, what COVID-19 has basically done, it has brought a distortion that did not exist, and therefore weakening the economy. And anything that shocks, an external shock to the economy, definitely affects the labor market and affects labor market incomes. So I think it's true what my colleague has said, that anything that is an external shock has definitely had a big impact on our economy, affecting labor market. So we need to really understand moving forward how, you know, what stimulus programs that the government can bring in order to stimulate the market. That is the labor market.
Fantastic. Now, Nderi, I want to come to you as well. Now, out of that 3.7 million jobs, we did have KNBS telling us that COVID-19 has only wiped 1.7 million jobs off the market. So now, these are two numbers we're talking about, 1.7 million and 3.7 million idle youth. So the question is going to be, I mean, has the government delivered on job creation? If we're still talking about 3.7 million, and what does it mean for all the former jobs that Jubilee government has created during the time they came into power, if indeed 1.7 million have gone because of the COVID-19 pandemic?
So you raise a very interesting question. And well, this is where we like to point out that governments actually don't create jobs. When you look at the general scheme of things, government actually benefits from job creation. They're not drivers of job creation. However, they do play an important role with regards to the labor market, and not just the labor market, just general economy, and which is how easy is it to do business in the country, and that's where the problem is. If you look at indices like Heritage Freedom Index, for example, you look at Fraser Index, you'll see that it's we're one of the most difficult places to do business in the world. So that is an area that the government needs to pull up its socks on, because like you rightly point out, when you have too many unemployed youth, it can become a problem even beyond economics. Now you're starting to talk about issues such as crime and whatnot. So the government, in my view, can do more or less, as it were, in terms of, so that we can give the entrepreneurs and investors the opportunity to take advantage and of the available opportunities to create, to invest and create jobs.
Yes.
Consequently,
I'm going to come back to you, Nderi, as we clear this conversation of joblessness now within the economy, so that we can ask then, what do they need to do now? Because then the COVID-19 situation has made it worse for them. Now, Kusewa, just before I come back to Nderi on that, well, I mean, look at those numbers. I mean, we're talking from 20 to 24, that has the highest number of unemployment cases in that data points. And so you like to think that also we graduate a lot of youth from universities who fall within that bracket, Kusewa. Does that point out to the failure of transition from our educational institutes into the job market?
Absolutely, absolutely. I mean, yes, there has been a gap and there has been a deficit in transitional numbers, and this is because capital investment in our country has been extremely slow to be able to uptake people from the universities. But again, right now we are seeing businesses adjusting strategies to remain profitable, and therefore, if there's no profit and if there's no strategic direction for most of these organizations, then obviously the uptake of graduates from universities is normally very low. So we need to stimulate the economy by being able to provide an enabling environment, a business environment that can promote businesses to be able to take people into employment. But as you can see right now, the situation has really changed and people are really retrenching because there's no business activity. And when there's low business activity, it means that people cannot be employed. So then really there has always been that gap initially, but this has been accelerated by the fact that there's this disruption in the economy that has been brought about by COVID-19.
Fantastic. Now, Nderi, cap this conversation therefore, because the million-dollar question is this. Yes, you have been struggling with unemployment, but the COVID-19 pandemic is coming, it's made even your situation worse. What can they do in the short term to fix this?
From what my reading of the economy, generally speaking, we look a lot like India. The Indian government pre-1980s, too many licenses, too many taxes. The question is, one begins to wonder is, how tenable is this from an investment perspective? And that's where my discussions with policymakers has always been around. I always ask them, how much do you think that these guys are happy to take home to invest? And because everybody is doing their modeling, and incidentally there's quite a bit of financing that's available from outside to fund opportunities both locally and regionally. However, there's a lack of quality businesses to invest in. That's a problem, and you can even see it in the Nairobi Securities Exchange as well. And that the issue has primarily been and we've said this before, that there's a hostile business environment locally. There's a lot of with regards to predictability in regulations. It's one day you wake up, you've got this or that or the other change in regulation, and it's difficult to plan in that environment, and therefore a lot of investments look unviable from the word go.
Yes.
And these are opportunities for employment that are not going to take off because the business case for it does not exist. And this is where we look at what policies policies are responsible for this, and we try to advise what the way forward is on such issues.
Fantastic. All right, now let's move on to the next issue this morning. But the Central Bank of Kenya data has now shown that transactions that include cash transfers and payments for goods and services shot to 450.98 billion, which denoted a 14.96% increase from the 392.17 billion in June. But the rise in the transactions reflected a month-on-month increase since May, following a sharp dip to 308 billion shillings in April when COVID-19 restrictions were at their stringiest, including Nairobi, Mombasa, and Kwale and Kilifi lockdowns. Now, the increase in mobile transactions has also been attributed to the slow reopening of the economy and the further stress from the Central Bank of Kenya for the economy to migrate online and further removal of charges for the bank to mobile wallet transactions. Question being this morning, can we attribute this growth to mobile money transactions now being used for business to business deals? Kusewa, I want to throw that to you now, because pre-COVID-19, pretty much business to business transactions via mobile wallets weren't that big. Now, mobile wallets increments were done. Now, we know that you can hold up to 300,000 in terms of mobile wallets on your money. Could we say that that is the biggest reason as well we're talking about this jump in the overall look in mobile transactions?
Absolutely. I mean, definitely that is the reason why there's a huge jump in mobile transactions and mobile money. And I think for money transfers and exchange businesses, we should also be able to be very careful on whether we are following international standards that should only be licensed or registered by the central bank. And that's where I think there has been a problem initially about supervisory role that the central bank should be able to regulate not only the very common mobile transactions that have been happening with some of the telcos and some of the fintechs, but open up that market so that we could have more inclusive uptake of finance and inclusive uptake of small businesses being able to transact more in that platform. So I think personally that indeed you're right when you say that there's been more B2B, especially on the SME sector. There's been a lot of uptake for finance, basically because people are not operating as they should be operating. And therefore we are calling for the central bank to be able to regulate that area so that more players could be included in that uptake of finance.
Pretty much, Nderi. Therefore, the question is, do we expect this trend to continue, or it's now during the COVID-19 pandemic?
Well, I mean, even going back historically, I mean, the uptake and use of mobile devices for purposes of payment or business has been growing and will continue to grow. Mm-hmm. And the reason for that is issues of convenience, issues of that's just the nature of, I mean, the trajectory. There's quite a bit of funding that is chasing fintech investments.
Yes.
And because that's been one of the areas that we see future growth. Globally, there's a push to go cashless. And of course now, for purposes of health, for health reasons, we've been seeing a lot of people, both B2B and B2C, mobile transactions. So we expect that to continue going forward as more investments are going into that area, just to make it a little bit less painful, more useful in terms of trade.
Yes, but Edward raises a very interesting point that this area needs to be regulated. Since we're talking about B2B transactions being the ones that are contributing heavily to that data that we're talking about this morning from the central bank, that this area needs to be regulated so that many players can actually enter into that. We don't know. I mean, M-Pesa holds more than 99% of B2B mobile transactions. And we're talking about this when we do know the merger between Telkom and Airtel, which was touted to be the biggest competitor to Safaricom in this space, has failed. Do you think central bank now needs to look at that and say, maybe we can't give this space to one player?
Well, that's a very interesting argument you bring forward. And the reason why Safaricom stays ahead is because they are one of the most innovative. They've got the highest penetration. They are a telco. They have got the masts and the infrastructure to push countrywide and go into areas where others will go. So they have got even the capital.
Yes, Nderi, but from a perspective of democratizing that space.
But the question is, why would you, as a customer,
yes,
why would you move away from Safaricom? There has to be a better value proposition and trust to move away. There are a lot of fintechs that are established that are trying to develop that.
Yes.
I know because we deal with them regularly.
Yes.
But the truth of the matter is, Safaricom has a very strong value proposition, and a lot of people have partnered. They've got money market, products.
Yes.
In Safaricom, you've got payment platforms. And they keep developing them regularly, right? And they keep pushing them to the market, and they keep taking risk on this.
Yes.
So these other guys, they try, but it's tough.
Yes.
It's tough.
Would you say, Edward, I just want to pop you in on this now, since you're the one who came up with this point of sort of regulating this space and enabling more players to come in. Would you say that the government has watched this space and saying, we are satisfied with the dominant player taking over this area completely?
Absolutely. I mean, government regulation and declaration of monies in banks hinders people from using financial services. Low-income earners end up turning to informal payment systems because we cannot say that, as my colleague has pointed out, that Safaricom has penetrated the market. That is really not the reason. What we needed was to unregulate that sector and help more players to come in and maybe offer competition so that more people could be put in the bracket. As it is right now, and the truth of the matter is, if you look at some of the products that telco offers, including Fuliza, for instance, you find that not everybody is roped in Fuliza. People want to take money from other mobile financial institutions like Branch, Tala. It's just that they've not been given the opportunity, the same level playing field as Safaricom. So in my view, we should be able to bring in more players into this market and unregulate this sector so that many players can participate. And therefore, the concept of financial inclusion comes into play. We cannot just include people with one or two companies. We need to unregulate that market. And once that is done, then we have more players inside. So yes, we need to unregulate that sector.
All right, gentlemen.
So that people move away from the informal sector of borrowing money into a formalized and a legitimate way of doing things.
Pretty much. Edward, thank you very much for that. For the sake of time, I just want us to move on to the next issue this morning, where Kenyans will now have a fuel subsidy every time international oil prices cross the 5,420 shillings and 40 cents per barrel mark, or $54 a barrel. Now, in a subsidy scheme that excludes petrol, the Ministry of Energy has told Parliament that Kenyans will not bear cost of diesel prices above 5,420 shillings a barrel. Now, the subsidy scheme will be raised from the development levy, which has been increased to 5 shillings and 40 cents a litre in July from, now wait for this, just 40 cents, representing a 1,250% rise. But we'll see motorists also pay a high of that same amount, 5 shillings and 40 cents per litre of diesel for the development levy. Let's begin there. Nderi, is this cushioning Kenyans or just finding a way of saying, I don't know, make me understand? What does that make you feel?
I like the way you emphasize the subsidy, and you let the cat out of the bag a little bit with the emphasis on the tax. The idea is just to tax. Let's be honest. If anybody with even a casual acquaintance with the government numbers today will understand that, I mean, government has to figure out how to raise revenues.
Yes.
And they have chosen to raise tax rates. Historically, I think from a tax perspective, I think tax revenue perspective, I think that it makes more sense to cut tax rates if you want to raise tax revenues.
Yes.
I think that's why we are in an economy. Those who are familiar with the terminology will say we're on the right side of the Laffer curve. Having said that, basically what they are saying is we're going to increase taxes, but we promise you that when prices reach a certain level,
yes,
we'll reimburse you.
Yes.
Essentially, that's what they're saying. So it really should be seen as a tax hike.
Talk to me about the timing for this. Edward, I'm going to cross to you shortly. Talk to me about the timing of this. Now, we do know that right now, the international oil prices are quite low. Does it sort of look as if the government is trying to get more now?
And historically, if you look at the way the government has dealt around the oil prices,
yes,
every time oil prices have fallen, they have raised taxes, and the prices remain almost stable at the pump.
Yes.
Yeah. And that's why you've got the people coming up with analysis that once upon a time the price at the pump used to track very well the Murban crude, for example.
Yes.
Murban crude prices, but now there seems to be some sort of divergence. And what's the cause of that divergence?
Yes.
We have to pay for the investments that we've been making under Jubilee.
All right, Edward, I mean, if you look at the development levy, it was just 40 cents, has been increased by 5 shillings, and now the PS is telling you, I mean, we'll caution you every time the barrel gets to $54.40 internationally. Is that a form of cushioning, or as Nderi says, get more now, if you can?
Well, I think my colleague is right. I mean, the Energy Regulatory Commission really, I think, is pushed by the oil marketers from where I sit. I have worked in an oil company initially. And I don't know whether it really reflects what is happening globally. I mean, we have seen that demand for oil has gone low. And this is because obviously there's very little global business activity. The flights are not moving, logistics is stopped. And so there's been a dip in oil prices, but in our country, we find a small surge. There's always an increase in oil prices, which really surprises me, because if international oil prices go down, we should also expect a replication in our markets. But unfortunately, I think since the government has very little room for revenues in our country, then it looks for areas where it can increase its revenues for other uses by increasing oil prices. So I think my colleague is right. I mean, the Energy Regulatory Commission has never been clean, in my view. And I think those oil prices are normally pushed by the oil marketers, the 5 big oil marketers, Shell, and so on and so forth. So it doesn't really reflect what the international prices or the international standards are. which begs us to ask certain questions which we don't want to ask in air, but they're obviously out there.
All right, with that, gentlemen, I want us to jump onto the last issue that we have for you this morning. It's just about the cancellation of dividends season. Now, most companies, therefore, are releasing their half-year results for the year ended June, and has stood out. And what has stood out from most of the announcements so far is companies declaring the non-payment of dividends, as most companies' half-year results indicate reduced profit margins and losses occasioned by the COVID-19 pandemic. Cancelling dividends now looks like the one measure that most of them are running to protect their reserves during the COVID-19 pandemic. Now, Central Bank of Kenya has already directed banks to seek approval from the regulator before declaring payments of dividends in this financial year. I want to start with you, Nderi. Is cancellation of dividend the only way for companies, therefore, to stay afloat during this COVID-19 season? And most of them are saying staying afloat. Then what does that reflect about the stability of the corporate environment in Kenya?
Well, for some people it's staying afloat. For some people it's, essentially protecting the company.
Yes.
Because you're trying to protect your cash reserves. Not protect, but hold on, because you've been making sales historically. Now the sales, have taken a hit. Maybe you're not able to sell for one reason or another.
Yes.
Demand has collapsed. The various dynamics that will make your business see a slowdown in revenue collection. Or even debt collection, because some people sell on credit, so you're not even sure that the cash you have on the books, the potential cash,
yes,
your receivables will actually come. So between now and at a certain time when everything normalizes,
yes,
how are you going to pay your salaries? How are you going to pay your suppliers and whatnot? So it makes a lot of sense right now to hold back.
Mm-hmm.
Hold back and conserve cash,
yes,
until such a time when things are much clearer,
yes,
and therefore you can resume normal relationships with your investors.
Yes. Just before I cross over to Edward this morning, do you expect that this trend will trickle into next year? Because it's uncertain and everybody's saying, well, we're approaching 2021 with some sort of optimism. But what if this crisis trickles into next year?
I'm optimistic it won't. And the reason I'm saying that is because now you're seeing a lot more traffic.
Yes.
I think I've been coming to town every other time,
yes,
since the pandemic was declared.
Yes.
And we locked down.
Yes.
And you could tell, one indicator of economic activity was just car traffic.
Yes.
So that has sort of improved. And you're seeing a little bit more movement of people around, and that sort of is an indicator of economic activity. Of course, balance sheets have been impacted. Demand has been destroyed because of we sort of put a pause on the economy.
Yes.
But and I'll even go a step further. People are even, you talk about dividend holdback, but people are had even paused on paying their interest, servicing their debt.
Yes.
Yeah, just to conserve cash.
Yes.
But over time we expect to see a thawing out of that. There are companies that will need balance sheet restructuring. Will have to bring in equity to show up their balance sheets and whatnot. So I think there will be both proactive and passive measures that will be taken as the economy normalizes.
Yes. All right, Edward, just crossing to you therefore. Yes, we are in the dividend cancellation season, fine, but what does this speak to our general outlook for our Kenyan bulls? Because most of those companies, the blue chips, are also really in the deep of cancelling those dividends, and they're saying, we don't know what's going to happen. And talk to me about what the alternatives could have been. We did see NCBA pay a share of the bonus. Could have that helped sort of retain that investor positive sentiment about our market outlook?
No, you're right. But what we are seeing with most companies is that they have a risk assessment strategy, which is inherent part of a broader risk management strategy for most of these companies, to introduce control measures so that they can remain profitable, or to eliminate any potential risk related to consequences of paying out dividends and so on and so forth. So, companies and most industries are cautious moving forward. They are very cautious on how to retain their operations and how to be able to remain profitable. And if you look at a lot of analysis, is that people pay out dividends when there's surplus. But in this case, when surplus is not there, then there's no reason for you to be able to pay dividends. As my friend has spoken, if you look at generally business activity being low, revenues from operations is extremely low. So most people will hold back and not pay out those dividends to their clients. Just precautionary measures.
Yes. Now, Nderi, just as we clear on this, is this an international phenomenon, cancellation of dividends as a result of the COVID-19 pandemic, or it is just a special case to our country?
It's international,
Yes.
and in some places it's a little bit more severe. You have established chains suspending even servicing debt, and some even lease payments. We've got aircraft companies, airlines, that have here Boeing and Airbus were complaining that people are not picking their calls.
Well, locally as well, we're expecting that 1,500 workers for KQ as well. Yes.
Yeah. So it's international, and you expect that when you freeze your economy,
Yes.
you put a pause. And even countries that didn't put a pause but have substantial external opens external sectors.
Yes.
Even those got impacted because you're not an island, so demand from outside, for example, would have led to a slowdown, and your economy, as a company, your cash flows will have suffered. So it's not unique to Kenya. Different countries are trying to resolve it differently, and I think we will as well.
Pretty much. Now, Nderi, just in 30 seconds, anything that the stimulus package would have done to safeguard these companies from what they're going on through right now?
Hard to say.
I
don't think anything could have done beyond what was done.
Yes. All right. Kusewa, anything that the stimulus package would have done to protect the local companies from whatever headlines that we're seeing them from right now?
Absolutely. It depends on how the central bank strategy on helping SMEs. If you give 50,000 shillings to a small and medium enterprise at this point, they'll truly appreciate, because there's no revenue, there's no sales of some of their products, especially the ones that import and export. So if you give them some small cash, that definitely does something to them.
Pretty much. On that note, gentlemen, Nderi, thank you very much for coming by. Kusewa, it was a pleasure hosting you this morning, sir.
Thank you.
All right, we take a short break here on Business, and once we come back, we shall be traveling all the way to your sector trends this morning.